Welcome to Profit First Nation, the official podcast for entrepreneurs who are operating their businesses in the zone of permanent profitability. I'm Mike Michalowicz, the author of Profit First, and now here's your Profit First Nation guide, Danielle Mulvey.
Hello, my entrepreneurial friends, and welcome back to another episode of Profit First Nation. Today, we're going to talk about the consequences and the ripple effects of failing to implement Profit First. You've heard about it. Maybe you've read the book. Maybe you've seen myself or Mike give our keynotes on Profit First, but something has kept you from making the leap. When I first started working on my keynote, I traveled with Mike, and this is going back like 7-8 years ago. And I remember we were on a tour and we were hitting up different EO chapters, and people would come up to him afterwards, just fanning out and saying, "Oh my gosh, I love Profit First. I've read the book 2 times. I've listened to it on audio 3 times. I have seen you keynote. This is my 2nd time seeing it." And Mike would be like, "Amazing. That's great. How's it working out for you?" And inevitably, the most common response was, "Well, I haven't implemented it yet. I'm not profitable yet, so I'm not ready to implement it." And it's like, oh my gosh, well, how's that working out for you? Because you've invested all this time and effort into understanding Profit First, but you missed the key point. Profit First is for every business that is running their business out of one banking account. Because when you're running your business out of one business banking account, that means that just all the money goes in there. And what happens? Well, the bills and the operating expenses get paid, and it looks like you got money. So when the need for new equipment or spending more on marketing comes up, you look at that one bank account and say, okay, well, we've got the money to spend. And then if you're lucky, if you're real lucky, you have a little something left over for profit. You probably don't even have enough to pay yourself consistently when you're operating out of one business checking account. And that's the trouble. That's why 83% of small businesses operate check to check. Guaranteed, those businesses that are operating check to check, money comes in and it's gone in a flash, are operating out of one business checking account. So let's run through these consequences of not implementing Profit First. And the first one is cash flow stress. When you're operating out of one business checking account, you're going to have cash flow stress because you are going to see the money and you're going to spend it. You're not going to be prudent about when, where, why, and how you're spending that money. When you have Profit First and you're taking that money from the income account as customers pay you, that money accumulates in your income account. And then on your designated allocation day, the book says the 10th and the 25th, I allocate biweekly on weeks that I have payroll. On those allocation days, you're going to allocate the money to Profit First, then owner's pay, taxes, and then operating expenses at the basics of Profit First. And now you know exactly how much you're accumulating towards profit. You know how much you have for owner's pay. You know how much you have set aside for taxes. And now we're not spending the whole lump of everything we got in terms of revenue from customers. Now we know that we've got this specific amount to spend when it comes to operating expenses. And the beauty here is when I have $5,000 to spend on operating expenses, I'm going to spend $5,000 or less, right? And if I need to spend $6,000 and I only have $5,000 to spend, what am I going to do? I'm not going to spend $6,000. I'm going to figure out a way to be resourceful, to get what I need that I thought was going to cost $6,000 and get it for $5,000. Sometimes it means making cuts and not spending on something. Sometimes it means finding a cheaper or a different alternative, being creative about things. It's amazing what you can do when you know exactly how much you have to do it. And it's not taking that big lump of cash that all of your clients paid you that is typically in that one business checking account. All right. Now, also too, in terms of the cash flow stress, in terms of profit first, we've got those 4 basic accounts: profit, owner's pay, tax, and operating expenses. But operating expenses, this one, that can be broken down into multiple accounts. When in doubt, add an account is what we say in profit first. So your operating expense can be made up of, let's just say, based off of your current allocation percentages or your target allocation percentages, that your operating expense is allocated at 50% of what your income balance is of real revenue. So what you can do with that is you can say, okay, well, 30% of this needs to go to payroll, 10% of it needs to go to operating expenses, and another 10% needs to go to marketing. So you'd actually have 3 sub-accounts of that operating expense. You'd have payroll, bills, overhead expenses, and then you'd also have marketing. So now we know exactly what we have to spend. We're not overspending. And when we're not overspending, what happens? The cash flow stress goes away because we know where the cash is going, where the cash is flowing. And when you have that, you don't have cash flow stress, right? The second ripple effect of implementing profit first is guaranteed owner's compensation. You're the MVP of the company. You're your company's most valuable person. And you, as the company's most valuable person, absolutely need to get paid a fair and equitable salary. Because if you continue to shortchange yourself and say, oh, well, sorry, we don't have enough money to pay myself, but I've paid my employees, I've paid my vendors, I've paid all this, over time, you are going to get burned out on the business because you're getting nothing in return for all of the blood, sweat, tears, the risk you put into your business every day. I'll tell you this, before Profit First, I had been an entrepreneur for many years before then. But when I got married and my husband said, hey, I noticed we didn't get paid this week by your company that you own. What's the deal? And I scoffed and I said, well, I'm an entrepreneur. Sometimes we pay ourselves and sometimes we don't pay ourselves. That's the badge we wear as an entrepreneur. And he was like, what? He came from a blue collar family where, working for a union, that check was good as guaranteed. And I realized at that point that clearly I needed to fix this. I needed to change things if I wanted to maintain a marriage. And so that's where Profit First came into play. And I was able to see that, yes, allocate to profit, then allocate to owner's pay. It is the second most important allocation that you do. It's not something that comes at the end. It's not what's left over. It is a priority so that you don't get burned out and that you are creating something that's even more valuable. No one's going to want a business that's not going to pay them. So start paying yourself with Profit First. The third ripple effect is growth decisions. So coming back to operating out of one business checking account, if you need a new piece of equipment, if you need to make a big bet on something and you need to put money on it, how do you know you have the money to spend when you're operating out of just one business checking account? When you implement Profit First, you have multiple opportunities to see and save for those growth opportunities and be savvy about making those decisions, because money and being successful in Profit First is just understanding the difference between spending and saving. That's it. And sometimes we need to save a little bit more over time before we make that big new equipment purchase. That thing that's going to help us grow, yeah, it's going to help us grow, but we need to do it in a thoughtful and methodical way and make sure that we have the cash to do it So again, when in doubt, add an account. You can always add an account for new equipment or replacing equipment. And it's just, again, a subset of that percentage of what you're allocating to operating expenses. And then when you have the money, now you have the opportunity for growth. The other benefit is your profit hold account. So remember, in Profit First, when you're allocating to your profit account, we're then going to transfer that to your profit hold account at an inconvenient bank. So that money is in a savings account at an inconvenient bank, out of sight, out of mind. And then at the end of each quarter, you're going to go to that inconvenient bank and you're going to take your profit distribution. And if you have business debt, you're going to take 99% of what's in that profit hold account and put it towards paying down the principal of that business debt, right? You're servicing the debt from operating expense, but you're going to pay down the principal and get rid of that debt by using your profit distribution at the end of each quarter. Once you've paid off your debt, then when you have your designated profit distribution day at the end of each quarter, you're going to take 50% out of that profit hold account, and that's your money. That's the joy and the fun of being an entrepreneur. This is where you can take your family on a great vacation. This is where you can put it towards that big new house or that pool or those great things that you've always dreamed about making a reality with your business. Then you're going to keep 50% in your profit hold account or sweep it into what I call a vault account. And that's going to be the money that you need in the event that there's a crisis. I don't think, and I am hoping, knock on wood, we don't have another COVID, but it's going to be that money for that thing that can really change your business. It's your own line of credit in your business to a certain degree, but it's that thing that you kind of don't want to touch. And I guarantee you this, once you start getting into this habit of allocating to profit and having these amazing quarterly profit distribution days once a quarter, you're going to even be less tempted to make those frivolous spending decisions on growth opportunities. All right. The fourth ripple effect to not implementing Profit First is tax surprises and compliance. All right, what am I talking about here? Well, there's two types of taxes, and I want to clear this up when it comes to Profit First. So in the 4 core accounts, profit, owners pay, taxes, and operating expense, that taxes account is taxes that you as the owner pay. So it does count for the taxes that you have to pay as the owner of the business for the profit that you make on the business. It also accounts for reimbursing you for the taxes you pay in terms of payroll taxes. So that tax account is specific benefit to the owner. Profit, owners pay, and taxes are 3 servings for you, the owner. We're just going to give them specific responsibilities to either be profit, to be owners pay, or to be the taxes that you have to pay on the business. The other type of taxes that you have, sales tax. Sales tax should come off the top, because if you collect sales tax and have to remit sales tax, that is not your money and it's not real revenue. So when you're doing your allocations from your income account, that is on real revenue. Okay. So if there is sales tax that you're collecting, you need to peel that sales tax out and put that into a designated sales tax account. Again, when in doubt, add an account. So again, that money's not there. When you're operating out of one business checking account and you have to remit sales tax, how on earth do you know what you owe in terms of your sales tax liability and how much of that is in that big pot of one business checking account? So you can stay in compliance, you can stay safe when you have that separate tax account for sales tax. And also too, I talked about this a little bit earlier, a subset of operating expense can be payroll. And again, the salary and the payroll taxes that you pay go into that payroll account. So when your payroll company takes out the money to fund the paychecks and to pay the payroll taxes, it's coming out of that account and you know that you have that money in there. This is really, really simple when you implement profit first and you give yourself this clarity with your cash and peace of mind. The fifth ripple effect of not implementing profit first is really the overall health of your business. When you have profit first implemented in your business, your bases are covered. You've got profit that is making your company stronger, that is going into a vault account at the end of each quarter and just building up your own line of credit in the event of an emergency or something. But the other thing too is that you are keeping some cash visible in the business. It shows up on your balance sheet and it makes your business more valuable and more attractive to potential investors, or in the event that you want to sell the business, or tragically, if you pass away and your family needs to sell the business, you've set them up for a very successful and higher ticket sale than if you didn't implement profit first. So the business health is critically important, and implementing profit first and being able to see specifically where the cash is going on a consistent basis, your financials will look so clean with profit first implemented in your business and not operating out of one business checking account that you are driving up the valuation of your business. Why be in this game unless you're going to be running, operating, and teeing yourself up for a successful exit? So again, the overall business health is massive when you implement profit first in your business. And you won't be one of those sad statistics of not many businesses make it past 1 year. Even fewer businesses obviously make it past 3 years, 5 years, 10 years. But the businesses that implement profit first really don't get into trouble and stay healthy. Thank you for tuning in to this episode of Profit First Nation. If you would like to work with a Profit First professional, certified bookkeeper, accountant, or coach to help you really dial in and implement Profit First right and now, then go to Profit First Nation and click on Contact, where you can connect with one of my fellow Profit First professionals. Cheers to another profitable day, my entrepreneurial friend.